QuickBooks Pro Desktop 2021. Fixed asset items, purchase truck that is totally financed. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our fixed asset practice file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're going to record the purchase of a truck that's going to be completely financed, and therefore no cash is going to be affected. Now, when you do a purchase of a truck, there's a couple different ways that you can do this. If you are a bookkeeper that is working with a CPA firm, then again, you might want to look at a relationship with them to think about how you can record things as efficiently as possible on both sides of the transactions. For example, you might say, I'm going to record things basically on a cash basis method over here, and when I have these large purchases, I'm going to keep the purchasing document, I'm going to list the purchase out, I'm going to record the cash part of the transaction only so that I can reconcile my bank accounts and whatnot, and I would like you then to take the purchase documentation, record the rest of the purchase, including the loan amount, and then the amount of the fixed asset that needs to be adjusted, and then any kind of adjustments to the interest on the loan, which I'm just going to be recording the payments to the loan. So if you do that, then if I go to the lists drop down and I look at my fixed asset list, for example, if no cash was paid, you might not enter anything into the financial statements if that were the case, but would still record it here on your fixed asset list, record the list here, which would not tie out to the balance sheet, and that would give the indication, and you would let the accountant know at the end of the year that I would like you to record that transaction for us and then give us the adjustments for it. Now, that can actually be a little bit easier sometimes because it might be not too bad to record a transaction like this that was financed. You can record that without too much trouble. But if there was a trade-in or things like that happening, then it can be a little bit more complex. And if there needs to be an adjustment for tax purposes or accounting purposes from what we'd recorded, then it's kind of double work for the CPA firm or the accounting firm or the tax firm, because they're going to have to basically reverse what we did so that they can then record it properly, right? It doesn't really save time. So if we just tell them, hey, we're not going to record it, we're going to record it on a cash basis so that we can reconcile, and then you make the adjustments based on the information we provide, which would include a line item and the attachment, that can actually work well. That's also the case with disposals. If you dispose of something or there's a trade-in, very unlikely you're going to get the depreciation portion right up to the point in time of sale, because you might not have those schedules. So you can't get it right in that case because you don't have the proper depreciation. So sometimes it would be easier than just not to record it and tell the CPA about the disposal so that they can then calculate the depreciation, because they have the depreciation software and tax software to record that. So in any case, keeping that in mind, we are going to put this on the books. Now, because cash is not affected, you would think that you wouldn't use the check account here. You could say, okay, I can't use the check because that's a decrease to cash. That's what we used last time. We could use a journal entry or the register, but there's kind of a problem with that. If I go up to the company and financial, and let's say I wanted to make a journal entry, which should be a straightforward journal entry. If I finance the entire thing for we're going to say $35,000 on, let's say it was 04/17/21, then you would think we would simply debit the the fixed asset for $35,000, and then you would simply credit a loan. I'm going to say loan truck. I'm going to call it number 2. So that I can differentiate the loans. I'm going to set up that loan right now. I'm going to set it up. It's going to be a loan type of loan. I'm going to separate the two loans. I have 2 loans now, so this is the second one. And I would put the last 4 digits of the loan number or something like that to track it. I'm going to save it. And you could record that, and that would work. But notice there's nothing in this journal entry to record the fixed asset item. There's no item thing here. So if I did it this way, then I would have to go to my fixed assets and add the item this way, add the item here as well. So you could do that. That's one method you can do. But if you want to add the item along with it, then you couldn't do it. So I'm not going to record this. I'm going to say, no, let's say not record that. Now, the other way you typically do this if you have no standard form, because there's no standard form here to record fixed asset purchase that's completely financed. Usually, we will use a form later. I'll show you how to use it, but it's not like the standard usage. The other way you can go is you can go to lists drop down, chart of accounts, and I could say I'm going to use the register now. I'm just going to enter it into the register. So I'm going to go into the automobiles register here, And I'm going to say as of 4/17/21, we have an increase of 35,000, and the other side is going to go to the loan. So now I'm going to record in the register. This is basically just a journal entry again. It's still basically a journal entry. But again, I can't, this would work the same way as the journal entry, but I don't have anything to enter the fixed asset item. If I hit the split down here, I have a split, but I still don't have anything to enter the items into. I need a check form or a bill form to enter the item. So again, I'm not going to record this. I'm going to say, nah, I don't, we could do that, but if I did that, then I would have to record it in here separately. Is there any way I can do this at the same time? Well, we could do that. We could go to the form, and then I'm going to still write a check, even though the checking account isn't used. I'm just going to use the check in order to write the journal entry, and then give me the added information of the item. So I'm going to say, all right, let's write a check then and see if that'll work. And I'm going to say this is going to happen as of 04/17/21. It's going to go to forward again. We're going to say now the check amount is 0. I'm not going to run a 0 check here. And then I'm going to record this on the two sides. I'm going to use the items tab now. Now I have the item tab. So I'm going to add the item on this side, and then I'm going to add the loan on this side, and it should tie itself out. So I'm going to say, all right, the item is going to go on the books. So I'm going to set up a new item, and this is going to be a fixed asset item now. This is going to be a 2021 F-150, and again, I would put the last 4 digits of the license number or some kind of identification number, the serial number or something there. I'm going to say it was new. The date is on 02, what did I say? 04/17/21. Price 35,000. Vendor Ford. And then the asset account is automobile. And description, location, office again. Office. And then serial number and so on. And the notes down below. So now we're able to add the item as we go. I'm going to add that and then skip this, ignore that. There we have it. And then the other side, now it put it up in the check up here. I don't want it up in the check. No, that stays 0. And then we're going to go to the expense side. The other side is going to go to the loan. I'm going to put it to the second one. We set up loan truck 2. This is going to be a credit, which we represent as negative 35,000. So I'm going to use the check form in order to just basically enter a journal entry, even though there's no impact on the checking account, so that we can then use the items. So what's this going to do? It's going to record it to the item list over here, and the item is going to drive it to be recorded on the balance sheet, which will include an increase to the automobile account of the 35,000. The other side, driven by the expense side, is simply going to go to an account, that account being the loan payable account, which is going to increase with a credit. Credit's represented by the negative number here. All right, let's record it, check it out, save it and close it. Save it and close it. And then we're going to go to the reports drop down, company and financial. Take a look at that balance sheet. That's the wrong one. That's not the one I wanted. I clicked the wrong one. Hold on. Reports drop down, company and financial. Balance sheet standard, and change the dates up top from 01/01/21 to 12/31/21 and OK. And then down here we have our automobile, the automobile, and it's not there because I chose the wrong account, it looks like. So if I go back to my fixed asset lists and I set up this item, this 35,000 item, if I double click on that, I put it to auto expense, and it should be going to the asset up top, the auto asset. So let's adjust that and then say OK, and then say ignore, and then go back to the balance sheet and then check out the account. So now we're at the 80,000. That looks right. And then if I double click on that, then we've got the 45 last, and then the 35 that we just put in place. We have the more detail for the memo here. Closing this back out, this then should tie out to what is on our detailed report, and that would be on our fixed asset item list. So the fixed asset item list, we have the 2 autos. There's the 45 and the 35, which add up to the 80 that's over here on the balance sheet. So that's going to tie out to what is on the balance sheet. So if I go back to the forms then, Note that if you have something that's going to be completely financed, then there's no form that's kind of used for that transaction because it doesn't happen like all the time, but you still can use the check form. We made that zero check. So you could do it basically two ways. Most people would probably use a journal entry or the register, and then you can enter it that format and then enter it into your item list, adding the item, and then I would attach the actual closing documentation here so that then you have it. You want to print all the current stuff out in the current time period, give it to the accountant basically at the end of the year. But if you want to do it at the same time, which is nice, then you can use that check form to do that, because the check form will provide you the added detail of adding the inventory item. So you can kind of connect it in that way, or at least input it at the same point in time. May not matter as much if you only have one item like we did here, but if you were to purchase multiple items and finance all of them, then it's kind of nice, because if you go to the balance sheet, then when I double click on it, you'll get the detail. So for example, if I was to have financed this purchase where I purchased, a bunch of different things at one time, and if I financed the entire thing, then if I use the items, it'll break it out so I can see them kind of individually in the detail report, which can tie out to the individual items that will be on the fixed asset report. So, but in this case, I only purchased one of them. I only purchased one new item here. So if I was to add them separately, then it wouldn't look too much different between basically the two methods. So you can use either method will basically work, but that's one way that you can use that check form to write a zero check to then get access to the item functionality.